This program is brought to you by realestate.com.au. With more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Thanks for being with us here on Business Now. Let's check out the state of the weekend home auction markets. And it's fair to say things look as though they might be cooling a little. Around the country, there were 1,833 auctions, a clearance rate just over 59%, lower than last week's, which was above 62%. In Sydney, there were 620 auctions. Oddly, that's fewer than last week. The clearance rate here also fell to just under 59%. But in Melbourne, there were 732 auctions. That's higher than last week, sharply higher. But the clearance rate fell from close on 70% to around 64%, you can see. In Brisbane, 63 auctions. Only half of those were sold, as you can see. In Adelaide, just 48 auctions. Another big fall in the clearance rate. 2/3 of those were sold. Finally, in Canberra, where there were 61 auctions, more than last week, and a clearance rate of 59%. So let's bring in here Eleanor, Creagh, Senior Economist with the REA Group. Eleanor, the talk of higher interest rates, I just wonder whether it might have put off a few prospective buyers out there over the weekend.
Yeah, look, I mean, it could be the case, and we did see that, I guess, clearance rates have eased off a little bit, I think.
Yeah.
But we certainly have seen that October is shaping up to be the busiest month so far this year with respect to auction volumes. So also at the same time, in some capital city markets, with more properties going to auction, maybe not unusual to see those clearance rates drop off a little bit, and a potential reflection of some of those demand-supply imbalances maybe beginning to ease off.
Because you know what it's like when there's not much stock on the market and the buyers are out there trying to chase it. There's not much choice as to what you can buy, and it tends to lead to higher prices, which we've seen in recent times. Many state capitals back at record levels. And effectively, if more stock does hit the market, there's more choice. You can go, I don't like that one, I like that one, and that one over there. That's the nature of any market.
That is exactly the case. And I mean, we did see that, I think, in the first half of this year, the listings environment was incredibly subdued. And that really saw the buyers that were out there competing over those fewer properties that were listed for sale. But we are starting to see that those demand-supply imbalances are easing off. That's particularly the case in Sydney and Melbourne. In Sydney, throughout September, we saw a more than 20% uplift annually on the number of new properties hitting the market. In Melbourne, it was around 10%. So we are starting to see more properties hitting the market. It is a little bit different when we look across the other capital city markets, though. Perth remains incredibly constrained, one of the tightest markets in the country with respect to the supply on market. And I think we're seeing that as well in price dynamics, with property prices in Perth rising 0.7% through the month of September. It really remains a pretty strong seller's market.
And so it's also one of those cases where September, the spring selling season, was always a big area, but it's sort of mucked about by football and all that type of thing. Now it seems October, as you point out, the volumes are now much stronger in October, which means really if you're a prospective buyer, maybe that's the time when you get more choice.
That's exactly right. So in September, although we saw that the number of new listings hitting the market was up 4.5% nationally year on year, was actually down from August. But that's not really uncommon. That's actually happened in 5 of the last 10 years, and that's quite rightly, as you mentioned, due to all those public holidays, etc. And we do usually see that there is then a pretty large uptick month on month in the flow of new listings hitting the market in October. And we're certainly seeing that potentially being reflected in the auction volumes that we've got scheduled to come to market over the next few weeks.
OK, there's one other aspect of this, and that is the prospect of higher interest rates for longer periods of time. People have leased going out there and buying have got to be cognizant of their ability to pay that mortgage, not just today, but 5, 10 years into the future.
It's certainly a factor for prospective buyers. I think we have approached a point, though, where there is a little bit more certainty around future borrowing costs than there was, say, this time 12 months ago. And I think we're seeing that reflected in conditions on the ground. And at the same time, we've got that stronger demand environment that's being precipitated by that strong rebound in net migration. Rental markets are still incredibly challenged. The labour market has also been pretty resilient. So although we could see the pace of price rises that we've seen this year maybe easing off with the supply of properties hitting the market picking up a little bit, we're probably going to see prices continue to rise with those stronger demand conditions in play.
Eleanor, Creagh, always good to have you in the program. Many thanks for your time today.